Welcome to Business Middle East. In this edition, we shed light on the coming Federal Reserve meeting and its potential repercussions. The Fed, in one of its most important meetings of the year, is assessing the strength of economic data from the first half of 2015. Since the end of quantitative easing last October, many promises have been made by policymakers about raising interest rates this month. However, the US economic numbers may be in stark contrast to Janet Yellen's ambitions to increase the interest rates. Christine Lagarde, managing director of the IMF, has urged the Fed to hold off. Should the Fed take this advice? Before discussing the issue, let's take a look at the scenarios.
Since last December, the Federal Reserve has reiterated its intention to raise interest rates in mid-2015. All eyes are now on the impending and highly significant decision. During the last meeting, Fed Chair Janet Yellen linked the interest rate hike with US economic figures. However, the IMF warned against it until 2016.
The Fed's first rate increase in almost 9 years has been carefully prepared and telegraphed. Nonetheless, regardless of the timing, higher US policy rates could still result in significant market volatility with financial stability consequences that go well beyond the US borders.
The IMF's remarks were made after an evaluation of the financial sector in the US, where the focus was on the risks of financial stability and appropriate policies, taking into consideration the position of the US dollar against other currencies. US economic figures since the beginning of the year have been underwhelming despite positive signs of improvement. Average wages reached their highest level since August 2013. The Fed pointed out that the economic slowdown in the first quarter was due to temporary factors. In spite of GDP that slowed down in first quarter data, the Fed still expects to see economic activity continue at a moderate pace.
The interest rate hikes, if enacted, would have a significant impact on the Arab and international markets. To learn more about the expected consequences of the meeting, joining us is Noor Aldin Al-Hamouri, Chief Market Strategist from ADS Securities. Hello, Noor. Do you think the US economic figures are enough to raise interest rates? And at ADS Securities, do you still hold the view that the Fed is likely to be cautious?
It's clear that the recent economic releases from the US are not enough for the Fed to raise rates in this meeting. There are many negative economic releases with few positive figures, including the jobs report. ADS still agrees with many in the market that the Fed will be more patient before raising rates, especially now that the global economy is slowing down along with the US economy. The inflation data from the US is not enough for a rate hike. The YOY Producer Price Index eased to a record low at 0.6% last month, while the Fed target is around 2%, which increases the chances of the Fed keeping the rates unchanged for now. The Fed may wait for next year before raising rates amid falling inflation.
بدلا من أن يقوم برفعها خلال العام الجاري في ظل انخفاض معدلات التضخم.
If the Fed decides to raise interest rates, how do you see US and global bond markets reacting?
The market had a notable decline across the globe recently with the Greek situation. If the Federal Reserve decides to raise rates, European and US bonds are likely to decline sharply and maybe faster than the latest decline, leading bond yields to soar further, which is not good for the Federal Reserve and the European Central Bank.
Let's take a look at the Middle East. How important is the Fed's decision to markets there? What would be the resulting scenarios for the region?
As we know, Middle East equities are very sensitive to global developments. Declining bonds had a slight negative impact on the region's equities. In the meantime, if the Federal Reserve decides to keep the rates on hold, this would be welcomed by Middle East markets. However, if the Fed raises the rates, this might lead to some negative reaction on the region's equities, as the rising US dollar may weigh on crude oil, causing falling equities across the region. Despite that, opening the door for foreign investors to invest in the Saudi market should be another positive catalyst for the region and for Saudi Arabia, which may lead to a notable stabilisation, especially now that everyone is looking for large funding to come in.
Thanks, Noor, for joining us. That's all for now. For more business news, you can join our business YouTube channel, Euronews Business. Thanks for watching. See you next week.
حسن المتابعة ويتجدد الموعد معكم الأسبوع المقبل.